strong execution, and my mantra is we do what we say we're going to do.
Now that Wall Street is happy, does that mean you can relax a little, or does that create even more pressure to be excellent?
Without a doubt, it does not get easier.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
So fast forward now to today, now that Wall Street is happy, does that mean you can relax a little, or does that create even more pressure to be excellent, to keep upping your own game?
Oh, without a doubt, it does not get easier. I say that it doesn't get easier because we're in a very competitive market. I think we have big ambitions about what we want to be able to do. I think it's always about, sort of what's next on the horizon. What does get a little bit easier is just the track record, right? So, I think, when I would say back, 3 or 4 years ago when I said, hey, something was going to happen, people were like, really? And now when we say, hey, something's going to happen, I think people sort of understand.
Now, AMD also has an award, I believe, for a 5% award to recognize excellence when an employee makes a product or delivers 5% better. How do you balance the incremental with the 5-year plan?
Well, it's actually called the next 5%. The way, I think about it is, look, we are very ambitious in what we want to do over the next 5 years. But then I think we also, I encourage people to learn from every interaction and, every project. And that's what the next 5% is all about. It's like, what have we learned? What can we do better the next time? How do we up our game? Because, as I said, the world's a very competitive place, and we want to make sure we're always upping our game.
There's no question, we're at a moment of reckoning for women, for Asian Americans in general, but also in leadership. And you are so unique in this sea of white men in this industry. What is your advice to people out there who look at you and think, like, how did she achieve what seems to be impossible?
I would say that it is a time where we want to recognize great people and give them, good opportunities. What was really important for me in my career is that I was given opportunities, and frankly, I learned through each one of those opportunities. And so, what I would say for women is, who are aspiring to do big things, be ambitious in what you think about. Be ambitious in what you think about. I have a saying that a mentor once told me about running towards problems. Take on that big, hard task. Even if you don't know how to do it, you're going to learn a tremendous amount in the process. And frankly, you're going to surprise yourself about how much you can do. And, what we have to do as the rest of the ecosystem is provide those opportunities and provide people an opportunity to learn and maybe make a few mistakes along the way, but really develop as they go through their careers.
Do you think mentorship is really important in your own next chapter of your career?
I really do, Emily. I mean, again, I'm a product of people who helped me along the way, and I really, really recognize that. I mean, I was given opportunities that other people didn't have, and I feel like I can do the same. And in particular, for women in engineering, that's a particular passion of mine because, frankly, they're not enough, and women are sometimes a little bit shy in their approach to things. And so, if I can provide that a little bit of confidence and a little bit of help to some of our top engineering talent of the future, that's something that I should do and I love doing.
Meantime, the chip industry has been defined for so long by Moore's Law and this idea that you can double the amount of computing crammed onto a single chip every couple of years. Are we at a point where Moore's Law could be ending? Can chips get even smaller than they actually are?
So I do believe that Moore's Law is significantly changing. That's the way we should say it. So, and it's changing because, the traditional ways that we have, shrunk chips and put more transistors on a chip, those things are just getting harder. Like you're reaching, physical limits. But there are other things that we're doing to keep that productivity increase. One of the things that we pioneered was this idea of chiplets. And so what that means is we can break up a big chip into little chips, and we can package them together, and we can put them on top of each other, and we can do all kinds of things that really brings more capability into the technology realm. So I think Moore's Law is changing. I think what that means is, other things like packaging and using different techniques will be more important. But one of the things that I truly believe, though, is that the innovation is not going to stop at all. And there are so many ideas for how do you keep the productivity increases going on that will continue to drive real capability. It'll just be done in a different way.
So what about what's next for you? How long do you see yourself running AMD?
Well, I got to tell you, I'm having so much fun, Emily, that there's no better place to be, honestly, if you're thinking about really having the opportunity to interact with so many smart people in this type of ecosystem. And chips are fun now, right? Everybody's talking about chips. So this is a great place to be.
Lisa Su, CEO of AMD, thank you so much for joining us. It's been great to have you.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
We can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. at somewhere close to the 1.5 degrees. And so I think it's very important to do it, because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
60 years ago, a Cold War fired up a space race between the Soviet Union and the United States.
We choose to go to the moon in this decade and do the other things, not because they are easy, but because they are hard.
For decades, national policy and NASA technology drove the US space program. Now, billionaires lead the way.
T-minus 10, 9.
It's a new dawn
and new race
for space.
Liftoff of the Falcon 9 and Crew Dragon. Go NASA, go SpaceX.
Hello, I'm Ed Ludlow.
And I'm Alex Steele. Over the next half hour, we'll explore the multi-billion-dollar 21st century space industry. Private companies are setting their goals higher and reaching them even faster, while governments around the world are pouring resources into research and development, training, and technology. But before we can understand where this is all going, we have to look at how we got here.
7, 6, 5, 1 for main engine start.
NASA's Space Shuttle program was a shining new phase in America's journey to the stars. The goal? Reusable rockets ferrying astronauts and cargo into orbit for decades.
Roger, Columbia.
At first, it did just that. Launches and landings became routine, and space just another destination, until the Challenger.
Oh my gosh.
The program just couldn't shake safety concerns, and disaster struck again in 2003 when the shuttle Columbia disintegrated upon re-entry, killing everyone aboard.
We had to do our mourning, a very, very, very tough situation. Lots of crying, lots of crying.
When the US shuttle program was shut down in 2011, the government officially portrayed it as a redirection of NASA's focus towards deep space exploration.
I have been pushing NASA to revamp its vision. Now what we need is that next technological breakthrough.
Space is really a hard thing to do. And I think one of the issues we'd had with our stakeholders was NASA wasn't really allowed to fail.
In reality, turning around reusable rockets took a lot of time, and flying into space just cost a lot of money. The U.S. spent $290 billion in today's dollars on the Gemini and Apollo programs that put the first man on the moon. And by the time the shuttle program ended, it was costing the government nearly $1.6 billion per flight.
President, welcome aboard the International Space Station.
The hope, by shifting NASA's focus into deep space, the financial burden of supporting the International Space Station would move.
Today, I think for space as a whole, for the space industry.
Even before he founded Tesla, Musk had set his eyes on space. He launched the company SpaceX in 2002 with the idea of reusing rockets to reduce the cost and doing it better.
You can fly and refly an orbit-class booster, which is the most expensive part of the rocket. This is going to be ultimately a huge revolution in spaceflight.
SpaceX, along with Boeing, secured $6.8 billion in NASA contracts to help fly astronauts into space.
Two heads are better than one. And honestly, getting like 400 of them is even better.
In 2012, Musk's SpaceX launched its Dragon spacecraft, the first commercial vehicle to deliver cargo to and from the International Space Station. And in 2020, Dragon carried a NASA crew to ISS for just $55 million per seat, 20% less than Russia was charging the US for the same service.
And SpaceX isn't alone. Jeff Bezos' Blue Origin was among several companies that received NASA funding to develop spaceflight technology, marking the next giant leap in commercializing space.
It's been just 11 years since U.S. Senators Bill Nelson and Kay Bailey Hutchinson passed legislation paving the way for NASA and the private sector to work together on space missions. Nelson now serves as NASA administrator and once flew a mission into space on the shuttle Columbia. He believes a program that has stalled is once again poised to soar.
We're going to see another incredible leap, that going back to the moon in preparation to venture out into the cosmos. Artemis, the vehicle, the SLS, will take our astronauts to lunar orbit. There they will transfer into a commercial vehicle, and that will go down to the surface of the moon. They'll do their activities, come back, and the spacecraft called Orion will return to Earth. So you see a combination of everything, public-private partnership.
In theory, it's a perfect combination. NASA's expertise and experience infused with creativity and capital from big companies and billionaires.
20 years ago, we were worried about our space industry. I'm not worried about that anymore.
Kathy Leaders has worked for NASA for nearly 30 years and now heads its human spaceflight office.
My vision of the future is that NASA's a multiplier. So that's really our goal, is to be the ultimate tech transfer and be able to take our knowledge of human spaceflight and be able to share with them what the nation's invested in us.
A big player in NASA's past, present, and future is Boeing. The aircraft giant has worked with the space agency since helping put Americans on the moon 50 years ago.
NASA will embark on big projects. It's not that they don't do satellites and other things at smaller scale, but they'll embark on moon landings. We have always aspired to be part of those big projects.
Jim Chilton has been at Boeing for 37 years and now leads the company's space and launch division. He says there's room for companies like SpaceX and Blue Origin to complement what Boeing brings to the race for space.
I think their business model is very different than a big publicly traded Boeing. You know, those companies are focused on one mission, and they're taking a very long cycle view of it. It's in the public domain that Mr. Bezos has said, I'll put $1 billion a year into Blue Origin. They're willing to dig in, focus their company somewhat more narrowly than Boeing's portfolio on that, and make it happen.
So now we have big publicly traded companies, entrepreneurs, governments, and investors all eager to get in on the action. Coming up, the money that drives the space race. Where does it come from, and how far can it take us in the industry?
We think the potential is, and pardon the pun, astronomical. And if there's one industry that could rival the internet in terms of how transformative it was and how much value was created and redistributed, space is on that short list of industries.
This is Bloomberg.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
What do you predict the Taliban will do in the coming months and years?
I would say consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban, not supporting transnational jihad, not basically in any activities outside of Afghanistan. If you really watch carefully what the Taliban have done in the past few days, They are engaged in a public relations offensive. They are trying to convince the world. If you listen carefully to what they're saying, you think that the Taliban are newly born Democrats. They are peacemakers. And the reason why they want to consolidate their power, they want to convince the world that the Taliban have changed.
Happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
Welcome back to this Bloomberg Special Report Space Race. I'm Alex Steele.
And I'm Ed Ludlow. Investors have poured nearly $200 billion into more than 1,500 space companies over the last 10 years, dwarfing the contracts awarded by NASA and other space agencies.
You might see the first trillionaire be a space-based business or be derived on that.
Morgan Stanley's Adam Jonas, who covers the auto sector, is one of the top analysts tracking the space race. And like everybody else, he is pumped.
I think that it would be very difficult in 10 or 20 years to imagine key businesses and ecosystems without the space backbone.
One thing that helped reignite investor interest in space.
Command and start. 2, 1.
Billionaires traveling to the stars.
On how it felt? Oh my God! My expectations were high and they were dramatically exceeded.
Amazon founder Jeff Bezos traveled aboard Blue Origin's first flight to space on July 20th.
Earth's atmosphere, it's so big, we live in it, and it seems gigantic, but when you get up there, you see that it's actually this teensy little thing that we need to protect. So, I don't know, for me, it was definitely incredible.
It was a key milestone in the company's effort to make space tourism viable and entice super wealthy customers to pay big money for a unique travel experience.
Space tourism is investable. It is sexy. But we think that the main value of space tourism, just in our team's opinion, is where it can go from here.
Bezos is not the only billionaire sending himself into space. On July 11th, Virgin Galactic founder Richard Branson made the journey to the stars. He sees space as a tourist destination, with his space line deploying reusable systems to shuttle customers back and forth to experience just a few minutes of weightlessness. I spoke with Branson just after he completed his flight.
I've always sort of pictured what it was going to be like. I mean, like the ride up there, the ride back. And I never realized that the whole experience was going to be so vivid. Woo!
One of the earliest and most active investors was Chad Anderson. His company has tracked the cash flowing in and out of space for years. He believes there's a lot more to come.
Early on, we had some wealthy individuals who were very excited about the potential of space technology and invested their own money, helped kick things off and get things started. The government played a key role early on in being an early funder and an early customer. And then venture capital firms got very excited about the opportunity, not just for rockets and satellites, but from the data that comes from those technologies. And today, we're seeing a lot of retail interest.
Money that once went primarily into rocket companies is being spread around more broadly as space startups join the SPAC wave. Mark Boggett's venture firm, Seraphim Capital, has been chasing space investments for more than 15 years. He says SPACs have helped accelerate the space race.
Most of these private companies are raising money annually in order to build out their operations. And it takes at least a quarter, if not two, for the management teams to engage with the private investors and to access the capital. So that takes a lot of serious management time off the business, focused on fundraising. So with SPACs, where these companies are raising larger sums of money, $300, $400, $500 million, which are really bringing forward some of their future rounds to now, it's a lot more efficient. So I think we've got many more space SPACs to come during the course of 2021.
Exchange-traded funds, or ETFs, brought another way for investors to tap into space. Over the past 3 years, a handful of space-themed ETFs have launched in North America and Europe that now hold about $800 million between them.
These vehicles are very much focused on the traditional space market because that's where most of the listed companies are. The new space market, the majority of the companies remain private.
The highest profile of that bunch is Cathie Wood and ARC's Space Exploration and Innovation ETF. Since launching in March, the fund has attracted more than $550 million of flows.
That ETF is an interesting one because when they launched it, it had a handful of the defense contractors that you would normally think of, the infrastructure companies that most people associate with space, but their largest holding is Trimble. And Trimble is a distribution company that brought us the first GPS receivers in the 80s.
Outside of the US, the funds are younger and smaller. Products like the Procure Space UCITS ETF in London and the Harvest Space Innovation ETF in Canada have attracted just a few $1 million after launching in the second quarter. And new products are launching every day.
We've recently launched the Seraphim Space Investment Trust on the UK London Stock Exchange. And that's a vehicle that we're targeting 20% per annum return over the longer term.
The bulk of the money is still in companies like SpaceX. A recent funding round raised over $1 billion from investors, including Fidelity Investments and Sequoia Capital. That round valued the company at $74 billion, according to Bloomberg. And it comes as Elon Musk promises to build out the ambitious Starlink network. Think thousands of connected satellites that can do revolutionary things like bring broadband services to millions, track refugees, and fight climate change while spotting storms before they get to catastrophic levels.
We have all of these satellites that are orbiting our planet and gathering all this really valuable information. And we are just now beginning to harness that information, distribute that information. We're in a very similar place in geospatial intelligence as we were at the GPS in the late 80s, early 90s. And so we see an equal amount of opportunity here for investors to make returns.
Investors are captivated by Starlink's potential to pay off, but the program will cost a lot of money. The total investment will be between $5 and $10 billion before the company is cash flow positive.
Step number one for Starlink is don't go bankrupt. That is, if we succeed in not going bankrupt, then that'll be great, and we can move on from there.
Musk says $20 to $30 billion could be needed to attain the goal of offering broadband to as much as 5% of the world's population, beyond the reach of conventional networks. The service has more than 69,000 active users and aims to quintuple that over the next year.
We think that the comms message there is much bigger, and the market is potentially much bigger than just providing internet to areas of the earth where there's unreliable or no internet service. That's certainly part of it, and there's a good ESG message there too. But we think by developing these orbits for high bandwidth, low latency communication, that will unlock things like urban air mobility and eVTOL, flying cars.
Blue Origin also has plans to compete in the satellite internet sector. Google, Amazon, and Microsoft have all invested heavily in cloud capabilities beamed in from beyond Earth's atmosphere. Morgan Stanley says it's largely this growth in space-based internet and data services that will drive the space industry to more than $1 trillion by 2040.
That's a fairly conservative 4 or 5% growth rate from the $400 billion space economy we are today. We think we're just scratching the surface. The hard part, Alex, will be not just the direct impact that space has on industry, but the indirect, right? So if you are able to turn on continents and open up more connectivity to not just homes, but vehicles, cars, ships, planes, everything that moves, as a second derivative, you may be opening up multiples of that $1 trillion number that wouldn't have been turned on if it weren't for the space comms. And that's just the comm side. Then you throw in transportation and EO, Earth observation, and we think we're being fairly conservative with that number.
Coming up, from profits to politics, there's more than just money on the line in the race for space.
You know, it's great that we have billionaires that thinks, you know, space is cool and they want to put money into it. It's also important that we continue to recognize that this is a strategic capability for our nation.
This is Bloomberg.
isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to Bloomberg's Space Race. I'm Ed Ludlow.
And I'm Alex Steele. The race for space isn't just a battle among billionaires or a contest for investors. It's a competition between countries.
We think that a very important aspect of the space economy, from both the dollars and cents and the TAM, but also from the national security aspect, is what China's doing in space. And they've made it a very big priority to develop their capabilities in space.
Russia and China recognized a decade ago our dependency and advantage in space and have been investing billions of dollars and a great deal of energy in applying their space technology to space warfare. And to be blunt about it, anti-satellite weaponry. We have not done that.
Tori Bruno is the president and CEO of United Launch Alliance, or ULA, a joint venture formed 15 years ago between Boeing and Lockheed Martin to provide launch services for government and commercial customers. Its track record is 140 successful launches and 0 failures.
We've always had this peaceful high ground where we could cooperate in space, we could use space in various ways, and the assets were never under threat. And today, I'm here to tell you that they absolutely are under threat. Russia and China have developed a wide variety of anti-satellite weapons that are in fact already deployed.
Many analysts forecast that the militarization of space will become a major source of growth in the sector as the US expands its budget for defense research and development with the advent of its new Space Force.
I think some military applications in space are somewhat inevitable.
98% of all weapons ordnance, according to our aerospace and defense team, is space dependent. And we think, at least this so far, that this is apolitical. That regardless of the administration, space is seen as existential.
Space is now a warfighting domain. We haven't had a new warfighting domain in 100 years, since World War I, when air was introduced. That's a major sea state change.
In the near term, the moon is critical territory as countries jockey for strategic advantages in space. The next big prize is Mars, but getting there is more challenging.
Mars is a long way off. The moon is only 3 days off. Mars, if you go with conventional propulsion, you're talking about 8-10 months to get there, at least a year to stay on the surface, and then 8 to 10 months coming back. That's a long time.
How do we make sure we can keep our people physically and psychologically well on the journey? There's going to be a lot of learning going through all those aspects of the mission that then gets us ready for this 3-year mission, 3 years going all the way to Mars and then having somebody safely come back. I want to try that out on the moon first before I send people to Mars.
While countries race towards the moon and Mars, it may not be long before the rest of us have our chance to go to space. Richard Branson's Virgin Galactic recently received full approval from the FAA to take commercial customers to space. A seat on Blue Origin's 11-minute New Shepard spaceflight sold at auction for $28 million. And for a fraction of that price, a company called Space Perspective will offer 6-hour rides over the stratosphere in a luxury balloon. Book now for trips starting in 2024. The first space hotel, Voyager Station, is in the planning stages, and passengers might someday arrive there on Boeing's Starliner.
Should people want to maybe have their own capsule in their own livery, like we sell airplanes, or we think there's all kinds of business possibilities in the future.
So when we think of space tourism, we think of it in 2 ways. How could it then parlay into transportation? That's where we find there's the most investor interest, and if you're willing to surrender to the long horizon needed to see it through, where they may be the greatest reward. But the other factor of space tourism is the public support, the visibility of live streaming these events and getting the general public behind it and getting our children interested in it.
And then there's Elon Musk's Starship project, which investor Chad Anderson thinks could be a game changer.
This is a vehicle that is fully reusable and is enormous. It can take so much capacity to orbit. It can be refueled in orbit and go into farther destinations. This is the vehicle that's going to take us to the moon, likely before NASA is able to do that.
The Starship can carry 100 metric tons and as many as 100 passengers. It's 160 feet high with a 30-foot diameter.
It's an enormous vehicle, and it's so low cost. I mean, they're talking about a cost of like $5 million per launch. When Starship comes online, I mean, this is an enormous vehicle that you could pay to outfit in whatever way you want, bring up all of your friends and family and do, you know, and have a hotel in space, stay for as long as you want and come back down. Or medical, you know, research institutions, whatever, can outfit it however they want, pay to outfit it and launch it. And it seems like you could do that and still save money based on what we're doing today.
Space is the kind of topic that turns hard-nosed investors into wide-eyed fans. We hope that you enjoyed our exploration of the business of space. Stay tuned to Bloomberg Television and Radio for continuing coverage of the space race. And of course, visit Bloomberg.com for 24/7 news and analysis. I'm Alex Steele.
And I'm Ed Ludlow.
This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Neptune was discovered, everyone wanted to do it because it was this clear demonstration that you can use math to discover objects.
Unfortunately, since then, no major planet in our solar system has been found. But thanks to modern telescopes, thousands of smaller objects have been discovered in the past few decades beyond Neptune, called trans-Neptunian objects, or TNOs. And planetary scientists at the California Institute of Technology have noticed some anomalies with these objects. Their hypothesis? A giant theoretical planet beyond Neptune, Planet 9. And thanks to a new telescope, equipped with the largest digital camera ever built, we may be one sky survey away from finally finding it.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
The U.S. is home to major tech giants Amazon, Apple, Facebook, Google, and Microsoft.
Together, these so-called Big Five make up 22% of the entire S&P 500. Apple alone reached a $2 trillion market cap in August 2020. Microsoft eclipsed the threshold in June 2021. That's more than the GDP of countries like South Korea, Russia, Canada, and Brazil. The year of the pandemic only boosted profits across U.S. big tech as more people communicated, shopped, watched, worked, and searched all online. But in the background, there's a drumbeat for more regulation of these tech giants with unparalleled market power. Many legislators argue there's now less competition and consumer choice.
Each of them engages in activity which is very problematic and significantly anti-competitive and an abuse of their power.
There aren't really viable competitors right now to Facebook. There aren't really viable competitors to Google, and that's a big problem.
Big tech is now more powerful than ever. They are more powerful economically, they are more powerful socially, and they are more powerful politically. We need to break up big tech.
But as the song goes, breaking up is hard to do. Hard decisions are what lie ahead for lawmakers, litigators, the judicial system, and even the CEOs of these companies, some of whom maintain they can self-regulate. But putting trust in U.S. tech giants to monitor themselves is a tall order, as the technology they make is used in nearly every aspect of our lives, and that's a lot of power. So when it comes to the safety of consumers, industries, and even governments, it may just be time to draw lines in the sand. Red lines.
I'm Emily Chang in San Francisco, part of the fertile Bay Area that's home to Silicon Valley and some of the biggest tech companies in the world, including Google, Apple, Facebook, Netflix, Twitter, and Uber. This is the global center for high technology and innovation, companies born in a spirit of both cooperation and competition.
When people are connected, we can just do some great things.
I don't think any of us would have had the audacity to predict it would grow as fast as it has.
For us, it's not about being first, it's about being the best.
But being the best can run into complications. When does the drive toward innovation and scale actually stifle competition? Over the next half hour, we'll talk about what happens when big tech goes unchecked, who's suing whom, and the consequences of litigation and legislation.
Some people say that the Googles of the world, Google, Facebook, Microsoft, Apple, Amazon, are too powerful. They have so much power in our economy that it's not healthy. What is your response to the view that the technology companies are becoming so dominant in our economy that it's not healthy?
We are very mindful of the fact that with the scale of these companies comes scrutiny, and that it's incumbent on us to engage with regulators and help them understand what is it that we're doing that is of benefit, how are we providing better services at lower costs, which is really indicative of the competitive nature of the world in which we operate.
I don't think big by itself is bad, but competition is good, and every business, in particular the businesses that are large and have high scale, the unintended consequences of your scale cannot be dealt after the fact. They need to be dealt while you're scaling.
Scaling. It's something Silicon Valley does well and fast, but it's not the first time the U.S. has witnessed such corporate enormity that falls under scrutiny. Here's a look back at some of the biggest antitrust cases in U.S. history.
John D. Rockefeller was a young but enterprising businessman from a poor family who found his way into the Ohio oil business during the Civil War. By 1870, he and his partners had turned Standard Oil into the largest refinery business in Cleveland. Over the next few decades, that one oil company became an empire, controlling up to 95% of refining across America. Rockefeller combining producers, refineries, and marketers into a trust that by 1906 caught the scrutiny of the U.S. government. Regulators sued the Standard Oil Corporation under the Sherman Antitrust Act. Within 5 years, the firm was ordered to sell off its major holdings, 33 companies in all. The resulting companies have since been renamed, and you'll recognize some of their more recent monikers, including Exxon, Chevron, and British Petroleum. Breakups also shaped the telecom industry. In 1974, the U.S. sued to break up AT&T, calling for the divestment of its subsidiary, Western Electric. At the time, Ma Bell serviced up to 85% of U.S. telephone lines, while most of the telephone equipment used was produced by Western Electric. Rather than lose the antitrust case, AT&T proposed an alternative, a self-imposed breakup. The company officially broke up in 1984. The result? 7 independent regional holding companies, or baby bells, giving consumers access to more choices and lower prices for long-distance service and phones. Companies like Bell Atlantic, Bell South, and US West emerged. Then there's the longest-running monopoly war in the history of the United States, the antitrust case against Microsoft. In 1998, the Department of Justice and attorneys general of 20 different states sued Microsoft, claiming its bundling of programs like Internet Explorer into its Windows operating system was monopolistic. The government accused Microsoft of making it difficult for consumers to install competing software like Netscape on their computers. Microsoft lost the case, with the presiding judge ruling the company violated the Sherman Antitrust Act and calling for Microsoft to divide the company in half, the operating system on one side and the software arm on the other. Microsoft appealed the decision, and the court overturned the earlier judge's ruling, ultimately leading to a 2001 settlement between Microsoft and the DOJ. The company would not need to break up, but it would be required to share computing interfaces with other companies. Microsoft agreed to abide by a consent decree through 2011, barring it from entering into Windows agreements that excluded competitors from new PCs. The Justice Department says that agreement leveled the playing field, making way for the rise of Apple and Google, and now a new generation of tech titans.
Fast forward to now, and you have a variety of legal cases and legislative calls for reform against current big tech companies. Echoes of the Microsoft case can be seen in a Justice Department lawsuit against Google. Amazon and Apple are both caught up in the antitrust action playing out in courts. And in the court of public opinion, the House Judiciary Committee recently cleared a handful of antitrust bills targeting big tech. Minnesota Democrat U.S. Senator Amy Klobuchar wants to modify laws regulating mergers and acquisitions to block certain anti-competitive conduct by larger firms.
I start this way. We've got some great products that are out there, and no one wants to get rid of them, whether it's Fitbits, whether it's iPhones, whether it is being able to order your groceries online. So let's start with that. And these companies have done very well. I am pleased that they've been successful and employed a bunch of Americans. But at the same time, our country has always rejuvenated capitalism. We've always said, okay, these are good products like we did with AT&T, but at some point, if there's no competition, these companies are allowed to become these monopolistic, dominant providers. And in the case of AT&T, no one wanted to destroy AT&T. They just wanted to make sure that new competitors can develop, like at the time MCI. It brought long distance rates down. We got the cell phone market to go from one big cell phone that fit in like Gordon Gekko's briefcase in that old movie Wall Street to where we are today. I think we need to look at it the same way. You have got situations where you'll have gateway companies that dominate so that they can literally tell people who want to advertise on them, in the case of Google or Facebook, look, I'm sorry, we're going to charge you for that. We just had a big story on app stores with Apple and Google and found out that they're charging Spotify or Match.com 30% of their revenues that come in, but they don't charge it to other big companies. They get to pick. I just don't think that's how a competitive marketplace works. So I look at it as, I love capitalism, but I always believe that you need to put some guards around it when it comes to ensuring capitalism works. And by the way, I'm not alone in this. Adam Smith, the godfather of capitalism and theory related to economics that our founding fathers subscribed to, he said the same thing. He said, yes, we want to have capitalism, but always watch out for what he called the standing armies of monopolies. That's why we have the Sherman Act. That's why we have the Clayton Act. And we need to be as sophisticated as the companies and the CEOs that run them when it comes to making sure we're fostering new entrants in the market.
That was U.S. Senator Amy Klobuchar. The congressman who represents Silicon Valley's 17th District, Representative Ro Khanna, says he thinks her proposed bill will get traction in both chambers.
Well, I like Amy Klobuchar's bill, which says if you're a big merger over $5 billion, then it default should have to be reviewed and you should have to prove that it's not anti-competitive. I'm more concerned about the smaller mergers. I mean, if you're a 50 million or 100 million acquisition, a lot of times those startups have a strategy of wanting to be acquired by a bigger company, and we don't want to squelch those startups from coming on board, nor do we want all of that to go in-house where we actually have even more concentration. So I think it has to be a balanced approach. I think Senator Klobuchar's legislation is a very good start.
Now, it seems like both Republicans and Democrats want action taken on big tech, but for very different reasons. Democrats want more moderation. Republicans are crying free speech. Is Congress a bigger impediment to tech regulation than the tech companies themselves?
It's a great point. Actually, I think a lot of the tech companies want regulation. They don't want to be making the decisions about what to take down and what to leave up. But you're absolutely right. The Democrats say, well, how can you keep some of that content up on these sites? It's inflaming hate. It's inflaming violence. The conservatives often say, no, 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 don't take anything down. And so these tech companies are getting mixed signals. What we need to do is put the politics aside, make sure we can have some basic guidelines for what type of content should be removed and what type of regulations could be effective. And until we do that, I think you're still going to have the internet be the Wild West, where Jack Dorsey and Mark Zuckerberg get to decide the rules. I don't think that's how we ought to operate.
That was Representative Ro Khanna of California's 17th District. Coming up on this Bloomberg Special Report, Red Lines, the U.S. and Big Tech, we'll break down some of the legal cases lobbed against tech giants. California Attorney General Rob Bonta sets his sights early on Facebook, but says all of big tech must be held in the same legal standard.
They're big. They're not bad because they're successful. They're not bad because they're powerful. They're bad if they violate the law and if they hurt consumers.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
When it comes to the complex issues around antitrust enforcement against U.S. technology companies, a good place to start is with Microsoft. In 1998, the U.S. Justice Department filed suit against the company, alleging it had violated parts of the Sherman Antitrust Act. The central issue was whether Microsoft, which had more than 90% share of the market for operating systems, was allowed to bundle its flagship Internet Explorer web browser software with Windows, thereby restricting competing web browsers like Netscape Navigator. Microsoft argued that bundling was the result of innovation, which was echoed by CEO at the time, Bill Gates, to Congress. The judge decided that Microsoft's dominance did constitute a monopoly, but when appealed, the ruling was eventually overturned. In the end, the DOJ settled with Microsoft, but the company's once dominant position in the tech industry was eclipsed by upstarts like Google and Facebook. Now, we see regulators and lawmakers bringing new antitrust arguments against big tech companies. We've just seen Amazon in the crosshairs, as D.C. Attorney General Carl Racine alleges that an Amazon policy that prohibits sellers from offering their products at a lower price on other websites is anti-competitive. And in December, we saw the FTC and 48 states sue Facebook over whether it crushed competition by essentially buying rivals like Instagram and WhatsApp. We've also got the Justice Department and more than a dozen state attorneys general investigating Google over how it operates its dominant search and ads businesses. And we've got Epic Games, which sued Apple over its App Store practices. That trial even put its two CEOs on the stand. In all of these antitrust cases, there's the issue of control over prices, fees, mergers and acquisitions, and whether big tech companies are exerting it fairly. The decisions in these ongoing cases could set real precedents that reverberate beyond the technology industry. So Silicon Valley and all of the business community is watching closely for the outcome. The future of the global economy will depend on it.
That was Bloomberg Senior Executive Editor for Global Technology, Brad Stone. Welcome back to a Bloomberg Special Report, U.S. and Big Tech. I'm Emily Chang in San Francisco. U.S. tech contributes mightily to the global economy. Microsoft reported it had more than 100,000 employees in the U.S. at the end of the first quarter. That's the same time Facebook reported more than 60,000 workers, up 26% since last year. And then there's Apple. The company says it employs 80,000 people. But if you add U.S.-based suppliers and those in the App Store ecosystem, Apple says it's responsible for 2 million jobs across 50 states. Silicon Valley has no doubt contributed to California's current $3 trillion GDP. And with Apple, Amazon, Facebook, Google, and Microsoft continuing to close deals, big tech's economic contribution isn't lost on California Attorney General Rob Bonta. I recently asked him if big in itself is bad.
When you're big and you're powerful, then there is the potential for overreach, for violation of the law, for doing things that's not consistent with what's best for consumers. So it deserves a close look. It deserves scrutiny from my office, from the California Attorney General. Look, these are homegrown companies. We're proud of what we've accomplished in California. Fifth largest economy in the world. We're adding 100,000 jobs, regularly to our economy as we roar back. But you need to act responsibly. You need to follow the rules. You need to follow the law. And we've seen indications. I mean, we just look at the facts that suggest that it might not be happening here or that it's not happening here. And so our job is to step in and make sure the law is followed.
How has tech avoided scrutiny for so long?
I think there's a lag period. We're using old models and applying it to innovative, brand new models and tech approaches and innovation, where the old model of addressing monopolies and anti-competitive practices might not fit. A lot of the old models are based on price. A lot of the products that tech companies provide are free. And so, and when you look at some of the approaches that the federal government is putting forward for consideration as legislation, it's not based on the price-based model. It's based on maybe making sure that a company like Facebook isn't allowed to purchase all of the competition and gobble it up, or making sure that you can take your privacy and all of your information that you put into one product and move it to another, if that's your choice, and not feel like you're locked in to one product forevermore.
Most tech companies seem to acknowledge the need for some kind of regulation. Microsoft President Brad Smith captured the mood of the moment from big tech's perspective.
I think we're in the relatively early stages of a broad conversation. You do see more concerns about the power of tech companies, ourselves included. People want to know what's the right balance between encouraging innovation and imposing more responsibility under the law. We're seeing this in Washington, we're seeing it in Brussels, we're seeing it around the world. I think in many ways where this is going is a particular focus on technology platforms that serve as gatekeepers. In other words, they not only serve as a platform like an operating system, but people need to go through them to sell their commerce, whether it's a product that's on Amazon or an app, say in the Apple App Store, or through a service like Google Search. And I think that's where we're going to see more and more government focus. That's where we're seeing a lot of the antitrust focus by states in the United States, especially when it gets connected to digital advertising. And I don't know what it will bring. I think it's too early to know. But you do see more of a common conversation around an agreed upon set of problems that people are trying to solve.
Coming up on Red Lines, U.S. and Big Tech, potential solutions and scenarios. Plus, there's a new sheriff in town. In June, Lina Khan was sworn in as the chair of the Federal Trade Commission. What her ascension means for big tech. As we go to break, more of what Silicon Valley makes of regulation. This is Bloomberg.
I actually believe in my heart of hearts that the government restricting Microsoft's ability to leverage their way through the browser opened the door for Facebook, Google, Amazon.
I'm a strong opponent to the breakup because I do think, just as I described, we're in globally competition, and you want our competitors to be strong. It isn't just a question of what happens within the U.S.
I think you have to look company by company what the technology companies are doing, and are they creating the most good in society, or has the downsides gotten too large?
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
A market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Let's take it for granted that Google is a natural monopoly. There's nothing wrong with it, as you know.
So Google is a monopoly?
Well, Google has more than 90% market share. By definition, it's a monopoly with a small m. That's fine.
That was Greylock partner Sridhar Ramaswamy, a former Google executive who oversaw all of Google's ad products, including search, display, and video. By the end of his 15 years at Google, the advertising arm was worth $115 billion. He's since left to start a Google competitor, the first ads-free subscription search engine, Neva. From former executives to shareholders, can meaningful change at big tech companies occur from within? I asked Arjuna Capital's Natasha Lamb, who presses tech companies to be more transparent as an activist investor, including Facebook, Microsoft, Apple, Google, and Amazon.
Where we are today, because Facebook and other tech companies really haven't kept their houses in order. They've made a mess, and now you're seeing Congress and the FTC and the AGs coming in and trying to clean it up with the tools at their disposal. It's not surprising that they're coming to whether it's Amazon on price controls, but even Facebook on the power and the control of mind share. If Facebook isn't going to clean their room, then the grown-ups are going to come in and do it.
One of those grown-ups is the very young Lina Khan, big tech critic, now the chair of the Federal Trade Commission.
At just 32 years old, Lina Khan took the helm of the FTC, setting the stage for a showdown between Washington and Silicon Valley. Khan is one of the most outspoken critics of big tech, which she says has gotten too big and should face tough questions about its power and impact. impact on democracy. Before the FTC, she served as a Columbia Law Antitrust Associate Professor and an advisor to the House Judiciary Subcommittee taking on antitrust issues. Khan is perhaps best known for her award-winning article titled Amazon's Antitrust Paradox, calling for greater scrutiny on the e-commerce giant. All eyes are now on how she puts reviews of big tech's so-called monopolistic practices to work.
I recently sat down with renowned antitrust attorney and Stanford law professor Mark Lemley, who described what the tech sector could be in for under Khan's tenure.
Well, I think that's definitely a further signal that the tech industries are in for some rough sledding on the antitrust front. Commissioner Khan is someone who's been quite vocal in her desire to rein in big tech, with an early focus on Amazon, but also a discussion of this idea of platforms and structural separation between the platform aspects and other aspects of a company's business. So I think she's going to be someone who pushes for aggressive antitrust enforcement in this industry. It also means that the Democrats, we now have an FTC at full strength, and there are 3 Democrats on the commission. So a number of cases in which the commission might otherwise have deadlocked, as it's done a couple of times in recent months, are cases where the commission is likely to take a more aggressive enforcement strategy.
As for what regulation and enforcement awaits all of these tech giants, it's anyone's guess. But one thing's for certain, the microscope is now fixated on the size of these companies, how fast they scale, and how much power they wield. Time will tell if long-standing anti-monopoly approaches will work, or if new strategies are needed to disrupt the disruptors. I'm Emily Chang in San Francisco. Thanks for joining this Bloomberg Special Report, Red Lines, U.S. and Big Tech.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
我们国家是缺乏健康金融系统的风险。
Jack Ma had billions at stake from an impending world-beating Ant Group IPO. Yet, the Alibaba founder cast caution to the side and went straight for the throat.
今天的银行延续的还是当铺思想。
With government officials in the audience, Ma dared to criticize the very Chinese regulatory ecosystem that's allowed his tech empire's largesse, excoriating what he said is an antiquated financial system rife with risk-adverse lending and bad oversight. And within days, Chinese authorities torpedoed the joint mega listing in Hong Kong and Shanghai.
Chinese authorities have abruptly halted Ant Group's mega IPO.
This is really a stunning turn of events.
And unveiled new antitrust regulations that led to a multi-billion-dollar fine for Alibaba and a drastic overhaul of its fintech powerhouse Ant. It's unlikely the speech alone caused such a regulatory reprisal, but it was perhaps ill-advised to be so frank, with the IPO's $35 billion waiting in the wings. Talk about misreading the room.
Final straw, tip of the iceberg, it really backfired.
I think it is a watershed moment for regulating big tech in China.
Jack Ma, always a bit brash.
I never worry about the regulation. Why not? Because I know I'm a good boy.
We always step ahead of the regulators. We have to. Otherwise, we go nowhere.
He at last crossed not only the proverbial, but a new, real red line. Hello and welcome to this Bloomberg Television special, Red Lines, China and Big Tech. I'm Stephen Engel, here at the heart of China's big tech ambitions, Shenzhen behind me and the surrounding Greater Bay region. There's no doubt China's big tech platforms like Alibaba and Tencent are national champions. But as we've seen in the United States with its own big tech companies, there's growing concern that unchecked big tech is perhaps growing too pervasive, too powerful, and therefore too ungovernable. The Chinese government is sending a clear message to its biggest tech platforms. Anti-competitive and financially risky behavior will have consequences. Fresh off slapping Alibaba with a record $2.8 billion fine and announcing Ant Group would be significantly revamped, Chinese regulators warned 34 other internet companies, including Tencent, ByteDance, Baidu, Meituan, Pinduoduo, and JD.com, that they too must rectify their anti-competitive practices, such as, in Alibaba's case, forcing merchants to choose its e-commerce platforms over competitors. Alibaba actually thanked the government for its oversight and promised to comply and move on. Regulators urged the other firms to heed Alibaba's example.
We have experienced this scrutiny, and we're happy to get the matter behind us.
The good news is for Alibaba, the overhang is now removed. So the management, which is in our view very tested, very experienced, now can go back to their normal business.
Like Washington, Beijing has a love-hate relationship with their tech companies, right? On the one hand, these companies represent China's successful modernization. They kind of represent China's growing global competitiveness. And, Beijing can't afford to chop its champions off at the knees. But on the other hand, Beijing has kind of long struggled with how to fit big tech into the socialist market economy.
For sure, the punishment could have been much worse. After all, Alibaba wasn't broken up. It received a one-time, albeit pricey, slap on the wrist, equal to 4% of 2019 domestic revenue, along with a long to-do list to change its anti-competitive ways.
Once a monopoly is formed, it is very hard to reverse it. If you look at what the EU have done, they slashed Google's with almost $8 billion of fine. But, it hasn't really changed the competitive dynamic in the EU market. It hasn't really facilitated new entry.
But the anti-monopoly crackdown is only part of this story. Regulators also want to combat systemic risks from flourishing but under-regulated consumer lending via fintech juggernauts like Ant Group from Alibaba and WeBank from Tencent. Regulators will require Ant to become a financial holding company, effectively to be supervised with the same lending and capital restrictions as a bank, not as a more freewheeling fintech. In China, there's essentially a super app duopoly, Alibaba/Ant, Tencent/WeChat, where Fin meets tech in a big way in the cloud, combining shopping, lending, food delivery, insurance, music, and video, you name it, in convenient one-stop mobile ecosystems.
These services are linked by their respective payments platforms, Ant's Alipay and Tencent's Tenpay and WeChat Pay, which together handle nearly 95% of all online purchases in China. Alipay alone claims to have more than 1 billion users, processing more than $17 trillion in transactions a year. Regulators are demanding a more level playing field.
We all know digital finance has made a revolutionary change in China, especially in the areas of financial inclusion. But I think we all would agree that financial transactions should be regulated the same way as all other financial transactions.
While payments contribute about a third of Ant's revenue, its biggest moneymaker is through credit platforms like Huabei, which means just spend, and Jiebei, or just lend, that funnel loans from banks to millions of consumers across Alibaba's many platforms. But Ant funds only 2% of those loans, with the rest underwritten and securitized by the banking partners that want to leverage Ant's massive reach. And that means most of the risk falls to the banks, many of which are state-owned.
Whenever risk is being passed on to the banks, which means that you pass down to the depositors, and in China's case, there's almost an implicit sovereign guarantee of the banking sector. That's a cost that the state almost need to be absorbing.
Authorities will now require Ant to cut off any improper linking of payments with other financial products, including lending, its biggest moneymaker.
Essentially, the tech companies have been arguing that they are different than banks, but they have been behaving like banks, and Chinese regulators are coming in and going, no, you're behaving like banks online, therefore you're going to be regulated like banks offline.
And financial groups, forward restructuring definitely is something that we need to monitor for any potential rating impact on Alibaba.
They got too big for their boots. They had so much money invested. They became competitors to, I think, state banks in China, and were critical of the regulators. This was regarded as lèse-majesté by the Chinese regime, which doesn't want any criticism from anyone.
The call for tightened oversight comes from the very top, with President Xi Jinping warning that Beijing will continue to go after so-called platform companies that have amassed too much data and market power. Bending the knee may be the key to survival. When Tencent found itself possibly in the regulatory crosshairs, management was quick to reassure investors that compliance is our lifeline. All of China's big tech tycoons are now on notice.
I mean, this is the whole ace card of Xi Jinping, right? Is the superior form of governance, this message that the government has changed. So there is this, there is a script really that you can no longer just bash government.
The underlying policy tensions have been there for a really long time. So a lot of tensions have been building up in the past 10 years. It just, until this really small event that the whole balance was tipped.
Coming up, we'll explore just how Alibaba and Tencent have grown so large, and how the new regulations could have a big impact on future big tech M&A in China.
A lot of banks don't like us in China. We're not necessarily interested in buying the banks to change it, but because of us chasing them around, they reform.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at the frontier, but a lot of times Americans want something bigger like the Titan. Is that Do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
I do everything to promoting the business in China, promoting the business for SME around the world. And the government loves me because, I am helping them to create a business. What is Alibaba.com or Yahoo China? What's it going to be 5 years from now? For Alibaba Group, in the 5 years will be like today, put Google plus eBay in China. In the US, you see food e-commerce, Amazon, Yahoo, Google, whatever. In China, there's only one. You. Alibaba, not me.
Welcome back to this Bloomberg Television special, Red Lines, China and Big Tech. I'm Stephen Engel. The Chinese economy was a much smaller beast when we sat down with Jack Ma a decade and a half ago in 2005. It was a pivotal year of financial transformation in China as the big state-owned banks were being restructured ahead of their mega listings the following year. Things in China were about to get very interesting.
The government in China had the vision. They understood Chinese people are not dumb. They are creative. They are entrepreneurial. So if they give them the opportunity, they will create amazing companies, whether Tencent or Alibaba and Ant and ByteDance, you name it, right?
The heads of older economy, industrial conglomerates dominated China's rich list in 2005, and yet none of these would even crack the top 400 richest globally. But signs of the impending internet boom were there, with 2 names in the top 10 hailing from technology companies. Fortunes, though, were about to change dramatically. Today, Jack Ma's wealth alone is about double that of the 40 richest in 2005 combined, and Ma's not even the richest in China today. 6 of the top 10 wealthiest on the 2021 Bloomberg China billionaires list are tech tycoons, with at least $25 billion in wealth each.
It's not just 1 or 2. China has a generation of, I would say, world-class companies.
Such as the 3rd member of the so-called BAT, or Baidu, Alibaba, Tencent triumvirate of leading Chinese internet platforms.
I think companies like us, we invest more than 15% of our total revenue every year to do R&D. I think the government like that. And in the meanwhile, I think antitrust is also good for innovation. You just cannot imagine, the number 1 and number 2 guy all of a sudden merge and gaining more than 90% of market share in the US. But that happened quite a few times in China before. That's not good for innovation. So I think that the antitrust push is kind of justified.
One way the BAT biggies grew their girth was by pouring billions into many of China's next generation tech unicorns, sometimes even cross-investing in the same startups. It obviously further inflated the big platforms' offerings, but arguments could be made on both sides whether the M&A closed off or cracked open competition.
When you zoom into one company and you say, well, gee, if the other guys are doing it and if I don't do it, then I am in a competitive disadvantage. So I think some measure to at least make the ground rule clearer, and that would certainly be helpful to us. Us meaning VCs who invest into early stage technology companies, quite frankly, with a goal of using new technologies and new business model to possibly disrupt some of these big companies.
More competition might be helpful to the perception of Alibaba, and that's growing. We see that with Pinduoduo, we see it with JD, we also see it with these streaming sites. That if you have all this traffic on the TikToks of China, including Douyin and Kuaishou, that you actually see a real opportunity for these companies eventually to make a dent in e-commerce. It's not there yet, it's happening, but there is competition on the margin for Alibaba.
It's important to note, many of these investments by Alibaba and Tencent flew under the domestic antitrust radar because nearly all the Chinese companies listed outside of China are done through a VIE structure, or variable interest entity.
For a really long time, antitrust authority did not vet any cases involving a VIE structure for fear of granting it legitimacy.
Right.
Because these had always operated in the legal gray area.
Yeah.
Okay? And as a result of that, you see, the duopoly that you just mentioned, Alibaba and Tencent have made hundreds of acquisitions without making any notification to the antitrust authority. The authority is sending a signal and make it very clear that VIE cases will no longer be exempted. They are going to scrutinize those deals. Although, some may say this might be a little bit too late.
I think the biggest challenge now for the companies there, on one hand, their business model and their practice were developed under the older regulatory regime, which is what was more relaxed. Now they're under closer scrutiny, but there is basically no precedent.
Already, under the new regulatory framework, China's antitrust watchdog has fined Alibaba, Tencent, Didi Chuxing, and Baidu for past acquisitions and investments that were not properly disclosed.
It doesn't mean that we had monopoly practices. The fine was not for that. And I also think it's not right for the government to block every deal, right? Certain kind of liquidity is also good for innovation. You just cannot do monopoly things.
The main query here is, has this firm done anything wrong? Has it trying to exclude competitors? Has it trying to charge consumers super competitive prices? All over the world, antitrust regulators have shared similar concern about big tech. But high market share does not necessarily mean this firm is monopoly.
Their job is to break up monopolies, right?
Bad monopolies.
There's a difference.
Yes.
Monopoly everywhere, if it hinders competition, is bad, right? So it deserves public attention. It deserves government regulators to take necessary actions to deal with that.
Has it hindered competition?
Of course, there's a legitimate question as regards the possibility those platforms might abuse their market power, okay? And the tech companies, Alibaba, Tencent, and others, also, as they get bigger and successful, they have responsibility to behave themselves.
Coming up, how does this cloud of uncertainty change how and where a company like Alibaba chooses to grow, such as in the cloud itself?
At the beginning, nobody cared about data. Later, everybody take care together. Just like last century, at the beginning, nobody take care of the oils. And now later, everybody love the oil. For the oil, they would love to have the wars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The power of Bloomberg. Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
When you go ahead of the regulators, always there's a painful thing. Because they say, hey, wait a minute, my job is to regulate. My job is not about innovation. My job is not to improve the other people's life. That's your job. It's the painful processing that Alibaba is learning.
How have you stayed close to the fire, though, without being burned?
We are very careful. When we're young, it's okay. Now we're big. We probably regulate ourselves much more stricter, much more than the regulators.
Welcome back to this Bloomberg Television special, Red Lines, China and Big Tech. I'm Stephen Engel. Clearly, it's been a delicate high-wire act for the outspoken Jack Ma to stay in the Chinese government's good graces. But when the Ant IPO was suddenly scuppered at the last minute, Jack Ma, the eternal showman, did a disappearing act.
Where is Jack Ma? The Chinese billionaire hasn't been seen in months.
The $600 billion question, where is Jack Ma?
I think when we hear, China billionaire and then the word missing, which was, I think wrong, but I mean, basically, we're used to the script. You've seen other high-profile business leaders fall afoul politically of the government. But so there's a tendency to think it's all going to be in the same bucket. I don't think so.
每年腊八节是我们约定的日子。
Jack has been very, very good at managing relationship with the government. He once famously said that I'm not marrying the government, I'm dating with the government. He knows how to manage the relationship with the government very well. And I think his remark kind of indicates, his business is quite vulnerable to regulatory attack.
There's a real danger here that in prosecuting an agenda of long-term domestic political control and greater centralization, that in fact you begin to snuff out private sector business confidence.
Our biggest concern is knee-jerk reactions to certain events. So if certain giant fintech companies listing getting pulled suddenly translate into a whole bunch of other events, such as Starboard listing suddenly slows down across the globe. And these kind of things do happen in China. And that's the part that really, really irritates practitioners on the ground.
China's securities regulator reportedly may indeed tighten rules for listing on China's Nasdaq-like star market, with added scrutiny on fintech.
I believe, better oversight does not necessarily choke off growth, unless it's dumb, stupid regulation, right? Which I don't think that's the case, because I think Chinese regulators are very, very smart, and in fact, market-friendly.
From an investment standpoint, how does this cloud or how does it change how you might make an investment in tech now?
Our investment approach hasn't changed. We continue to think, technology can be force for good.
At the end of the day, is the Chinese big tech surge going to be limited because of this?
I don't think so. I think they might even have the potential to grow even bigger and stronger. Because from the government standpoint, it's not in their interest to see the tech companies to become smaller and weaker.
So what leverage does Jack Ma and Pony Ma have?
The leverage lies in their cash rich. They have strong talent pool. They are already very sophisticated in software development.
They have the data.
Yeah.
Which the government probably wants as well.
I wouldn't disagree with that.
A year and a half ago, China released a document codifying data as one of the core socialist factors of production, under the idea that you must have a well-regulated data market in order to maintain economic growth. This is the fundamental core operating principle that China will be using to regulate big tech over the next 10 years, and it's something that really hasn't yet entered into the Western lexicon.
The Chinese government is said to be mulling a state-backed joint venture with the large platforms to oversee how their combined data is managed and shared.
Anti-monopoly alone wouldn't solve the problem. Rather, there should be an agency in China which serves as a champion for the internet sector. In other words, not try to crack down the problems, try to develop the sector.
But pooling data raises a host of privacy issues. Tencent's Pony Ma, in a March analyst call, conceded that data is extremely complicated. There's a fine line, he says, between ensuring users' privacy and opening up data to sharing. Others, like Baidu, claim to be open to opening their data vaults.
It's very much in line with our belief. We run a lot of open platforms. For autonomous driving, it's Apollo, right? For AI in general, we have Baidu Brain, which is also open. We like openness. We want to share data with other partners.
Giving up one's data surely could upend existing market-leading positions, but non-compliance is perhaps the bigger risk. For Alibaba, getting off with a fine doesn't mean it's in the clear, and that alone surely won't pave the way for an ant-IPO resurrection.
It depends on how the government restructure our regulatory framework in terms of financial technology, and also depends on how the company reacts to the changing regulatory environment.
Which begs the question, how far will the government go in taking on Alibaba and Tencent and all the others?
Of course, they need the golden eggs laid by these geese, right? They need the innovation, the growth. And they know that if they try and do this all from a state company, it's not going to work.
I'm hopeful. I think as long as the policies and regulations are applied fairly across the board, then I think positive results will come about. Now, if these regulations and policies are applied unevenly, and especially unevenly with certain political agenda behind it, then it could be a different story.
This is a story that has many more chapters to be written, not only in China, but anywhere where governments may feel that big tech has crossed the line. For Bloomberg Television, I'm Stephen Engel. Thanks for watching.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
never sleep. So stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
A nation in default, an economy in ruins, a desperate struggle for millions.
Here, there are so many people hungry, miserable, without jobs.
Now, after 4 years of crippling U.S. sanctions, Venezuelan President Nicolás Maduro senses an opportunity.
Hopefully we can find paths of closeness, of respect, paths of mutual benefit.
Donald Trump is out. Joe Biden is in. He wants to negotiate a deal.
Paths that allow us to normalize relations between the United States and Venezuela.
But Venezuela isn't a free country. The political opposition has been crushed. Media are censored or controlled by the state. If Maduro wants to end the sanctions, much has to change. No wonder there's so much skepticism.
The socioeconomic situation of Venezuela is like a very thin thread that could break.
This is Venezuela, a country that has suffered one of the greatest economic and humanitarian crises in modern history. Today, it appears Nicolás Maduro and his government are prepared to negotiate an agreement that might end U.S. sanctions and pave the way for free and fair elections. Is he really ready to deal, or just setting the stage for another disappointment? I'm Eric Schatzker, and I came here to talk to the power brokers who will decide this country's future. Join me as we go inside Venezuela. Less than a decade ago, Venezuela was the richest country in Latin America, a global oil powerhouse flush with petrodollars. Today, it's one of the poorest, and life for millions is a struggle for survival.
The economy has been flat on its back for 22 years, dragging more and more each day. Every day, hyperinflation abuses us. It doesn't allow us to eat. It doesn't allow us to get medicine.
Venezuela's decline is a story of destructive domestic politics and failed foreign intervention. It started with Hugo Chavez, the self-styled revolutionary, and it continues today with his chosen successor, President Nicolás Maduro. Venezuela used to be the biggest oil exporter to the United States, bigger than Saudi Arabia. But since 2019, U.S. sanctions have kept the country from selling most of its crude and forced it into default.
Imposing economic sanctions on the knowledge that this is going to hurt the population as a whole, it is essentially kind of targeting civilians, or at least doing something that you're aware generates significant collateral damage among non-combatants.
According to government figures, the economic embargo has wiped out some $50 billion a year of export revenue.
Si Venezuela no puede producir petróleo y venderlo,
if Venezuela can't produce oil and sell it, can't produce and sell its gold, can't produce and sell its bauxite, can't produce iron, etc., etc., and can't earn revenue in the international market, how is it supposed to pay the holders of Venezuelan bonds?
Even Maduro, whose authoritarian regime has withstood U.S. efforts to oust him, is desperate for a deal.
This world has to change. This situation has to change.
Maduro appears on state television multiple times a week, blasting the U.S. government and his political opponents for Venezuela's troubles. But the economy was already in shambles by the time he took office in 2013. Chavez wanted to build a socialist utopia.
Soy socialista, bolivariano, cristiano, y también marxista.
When Chavez came into power, there were 4 steps you had to take to export a container of chocolate.
That's Jorge Redmond, CEO of Chocolates El Rey. He makes some of Venezuela's finest chocolate and sells it all over the world.
Today, there's 90 steps. And there are 19 ministries involved in this process of permissions and documents and whatever. So if we could go back to 4 or 5 steps, that would be a big help for our business. And that's just an example of everything else that goes on.
The U.S. sanctions go back to the presidency of George W. Bush and continued under Barack Obama. They intensified during the Trump administration, especially after Venezuela's 2018 election. Maduro won, but international observers said his victory was a sham.
The main reason why Maduro is still there is not a lack of unity. We've had almost perfect unity in the last 12 years in Venezuela through primaries, consensus, demonstrations, and institutional legitimacy in the case of the president of the parliament. The main reason is because Maduro is a dictator.
Juan Guaido, the leader of Venezuela's legislature, is whom the U.S. recognizes as president, not Maduro.
Today there is more pressure on Maduro and his regime. What they pretended was social control degenerated into a total lack of control. Because today they can't even ensure a supply of gasoline. The country with the world's largest proven oil reserves does not have gasoline, so farmers can transport their food from the countryside to the city.
Across the country, drivers line up for hours, sometimes days, to fill up with gas. Venezuela's once mighty oil industry has been crippled. Production that peaked at almost 3.5 million barrels a day shrank to just 310,000, not enough to meet domestic demand.
2 days, more or less approximately, to line up for tomorrow. If we're lucky, tomorrow they'll fill up with gasoline.
From today until tomorrow. I have to spend the whole night here until tomorrow.
It's a disaster. A total disaster. Losing a day, a whole day of work, of rest, an entire day.
In June of 2021, Oil Minister Tarek Al-Aissami predicted the lineups would be gone in weeks. But they're still here. Across the country, infrastructure is crumbling. Poverty is everywhere. Slums blanket the hillsides as far as the eye can see. And without access to vaccines, COVID-19 is ravaging the population.
My God, we have to get out of this. Lord, please. Enough waiting already. Mr. President, please make it so these people are vaccinated. Help them.
There have never been so many poor people in Venezuela. Public services were never this bad. The income of the Venezuelan family has never been as low as today. None of the people you see here have been vaccinated, even though there is a pandemic.
Enrique Capriles is a former state governor and presidential candidate.
I think that the socio-economic situation of Venezuela is like a very thin thread that could break. It has not broken, but it could break.
Maduro knows things can't go on like this. Already, he's started to unwind many of Chavez's policies.
If the restrictions, the sanctions, the persecution of the bank accounts, of the finances, of the economy, of the oil production that were forced on Venezuela, if they were forced on another country of the world, what would happen? What would they do? That's what we should ask ourselves. Look at the globe, point to another country and see what would happen. How that would affect their reality. Well, Venezuela has had to declare a war economy. We are acting on a war economy.
Price controls are mostly gone. Gasoline subsidies have been reduced. Public spending was slashed. Maduro had little choice. The economy was in a free fall. Inflation became a national obsession.
In Venezuela, there have already been 2 devaluations and the third is coming. One in 2008 and another devaluation in 2018. In 2008, they removed 3 zeros from the currency, and in 2018, they removed 5 zeros. And they are planning to remove 6 zeros from the currency. It means that inflation in Venezuela exceeds 10 zeros. This is hyperinflation. The currency is useless.
This is the worst. I mean, I don't mean to be so negative, but in Venezuela, we've never seen something like this. We have heard and read about inflations in Argentina and in Chile and Brazil, And we've always thought, well, that's their problem. But now we find that it's very much our problem.
Venezuela's official currency, the bolivar, is almost worthless. Even the most basic goods cost millions. Nowadays, prices for just about everything are in dollars. The government is letting them circulate freely.
Starting in November, we started using only dollars and to write down people's names who use dollars. Because the bolivar is useless. I was selling something to people for 20 million bolivars, and soon after, I couldn't buy anything with those 20 million.
Dollarization has improved life for many. Store shelves that sat empty only a few years ago are full again. Zelle, the app that draws on dollars in U.S. bank accounts, is hugely popular.
Lowering inflation rates is not capitalist. It's preserving and defending the purchasing power of workers. Generating more food production is not capitalist. It's guaranteeing the food security of the Venezuelan people, a blockaded country.
Delcy Rodriguez, Maduro's vice president, is the architect of all these reforms.
Today, the Venezuelan private sector is becoming less dependent on oil income. It's becoming a sector that invests, produces, and it's finding space in Venezuela to develop its potential.
Jorge Redmond is still waiting for a rebound.
I'd like to believe in it, and I think in the end, I think the government has come to the conclusion that they need to do that because nothing works.
Our economy had already collapsed, so Maduro was forced to acknowledge under the circumstances the dollarization. Maduro never established the dollarization. He didn't do it actively. It happened to him in order for his dictatorship to survive politically.
For Maduro, it's a tricky balancing act. One minute, he's almost begging for negotiations to end the U.S. sanctions. The next, he's denouncing Yankee imperialism.
I would say to President Joe Biden, stop from the White House, from the State Department. Stop the demonization of Venezuela, the demonization of the Bolivarian Revolution, the demonization of President Nicolas Maduro. Hopefully we can find paths of closeness, of respect, paths of mutual benefits, and paths that allow us to normalize relations between the United States and Venezuela.
Just how far is Maduro willing to go? Or is he stalling for time? That's next on Inside Venezuela.
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Venezuelan President Nicolás Maduro says he wants a deal to ease the U.S. sanctions that crippled his country's economy.
To establish a real, objective, credible, verifiable foundation and a negotiation process to normalize relations between the two countries in win-win terms, which has been our goal for a long time.
For the first time in years, there's some reason for optimism. The U.S. remains deeply concerned about the ongoing crisis in Venezuela, and the Biden administration has set conditions for meaningful progress, starting with electoral conditions that abide by international standards for democracy.
The optimist in me, makes me say that the sort of magnetic pull between the United States and Venezuela will overcome everything else.
What hasn't changed is the assessment of Maduro himself. Here's how President Trump summed it up during his last State of the Union.
The United States is leading a 59-nation diplomatic coalition against the socialist dictator of Venezuela, Nicolás Maduro. Maduro is an illegitimate ruler, a tyrant who brutalizes his people, but Maduro's grip on tyranny will be smashed and broken. Here this evening is a very brave man who carries with him the hopes, dreams, and aspirations of all Venezuelans. Joining us in the gallery is the true and legitimate president of Venezuela, Juan Guaido. Mr. President, please take this message back to your family.
Maduro not only outlasted Trump, he insists the former president was ready to negotiate.
We always had contact with Donald Trump. I was about to meet with Donald Trump personally in September of 2018, when I went to the United Nations General Assembly in New York. We received the call from the White House, but we know about the pressures John Bolton and other officials around Donald Trump were applying to prevent what he wanted, which was a meeting with me. Had we met, history might be different.
You were going to go?
We were going to meet in New York. We made all the arrangements by phone to meet in New York. But in the end, the pressure was too much for him, for Donald Trump, and contact was canceled.
Lately, Maduro has been giving ground. He moved 6 political detainees from prison to house arrest, gave the opposition seats on an elections council, and allowed the World Food Program into Venezuela.
Trump lost. There is a new administration in Washington. That administration believes that positions need to be aligned with Europe, believes that the international community needs to be aligned in the search for the recovery of democracy in Venezuela. They are ready to accompany and support the negotiation process. There are also people in Maduro's side who have noticed that the existential conflict is not good in the position they are in because there is no way to recover the country economically. I imagine the government is under heavy internal pressure.
A new round of talks between the government and the opposition is underway, mediated by Norway.
The reality is that negotiations in Venezuela have consistently and systematically failed. So this is not the first attempt at negotiations, nor the second, nor the third.
But dialogue is a constructive step after the uprisings and insurgencies that failed to topple Maduro in 2017 and 2019. Inside the opposition, divisions are sharp. One side favors a step-by-step approach, the gradual easing of sanctions in exchange for concessions. The other side, led by Guaido, wants to keep the sanctions in force and only recently agreed to negotiate. What everyone can agree on is that conflict and confusion only help Maduro.
En definitiva, estos regímenes autoritarios.
These authoritarian regimes want to win by wearing out, by getting the world tired of fighting, by getting Venezuelans tired of demanding. That is what happened in Cuba at the time. I'm going to be very clear. We are not going to get tired of fighting or demanding our rights, because that is something very important.
Que no creen que esto hay que construirlo.
It is true that the government has cheated, deviated, but it is also true that we have made very costly mistakes. Every time we have advanced, we have arrived at a dead end. And in the end, the result hasn't weakened Maduro, but strengthened him in his position of power.
Y bueno, al final el resultado ha sido no de debilitar a Maduro, sino más bien de fortalecerlo en su posición de poder.
Maduro faces a big test in November of 2021, regional elections.
The next few months are critical to get international observers lined up for the November elections.
Will he let Venezuelans vote freely and fairly? That and more coming up in this Bloomberg special report, Inside Venezuela.
Somebody said, I want to be the next Reid Hoffman. What would you say is the best training ground to do that?
Well, I'm still young enough that I'm still hoping to be the next Reid Hoffman myself.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Venezuela's disputed election in 2018 made President Nicolás Maduro a pariah in the West and provoked a crushing series of U.S. sanctions. Now he has a chance to reverse the damage. If the regional elections in November 2021 are considered free and fair enough, the Biden administration might relieve some of the pressure on the Venezuelan economy and its people.
I would create a humanitarian oil for food program so that Venezuela can regain access to the oil revenues that it's lost because of sanctions, and it can use them in addressing its economic and humanitarian crisis.
It appears Maduro is willing to make concessions, though he clearly won't surrender all of his negotiating leverage.
You can't put a gun to the head of the people of Venezuela with the United States telling us what we need to do. We would turn into a colony. We would turn into a protectorate.
The path forward is strewn with obstacles, like the political opposition. It's fragmented, and there's no one leader to rally around.
A president that is as unpopular as Maduro, that has so mismanaged the economy, and that is accused of the type of atrocities that Maduro is accused of, cannot win an election. What can happen is that the opposition can lose it. The opposition is in such disarray right now.
Then there's the government. From the outside, it looks like Maduro has absolute authority. Inside, it's a different story.
I'm not sure that you could say that Maduro is a traditional dictator. In other words, he doesn't really have full control. It's not a one-man, it's not l'état c'est moi. That's not the position he's in. He really has to balance off a lot of the competing factions within his own party.
The longer it takes to reach a solution, the longer Maduro has to fortify his position. Without access to oil markets, he turned to China, Russia, Iran, and Cuba for help. And in Caracas, there's evidence the economy is growing again. For now, Venezuela can't issue, repay, or restructure its debt, and sanctions bar U.S. investors from trading the bonds. They're worth just pennies on the dollar.
En este momento, Venezuela tiene voluntad de pago.
Right now, Venezuela wants to pay, but it can't because of the blockade. I'm not going to tell you our strategy, but I will note our willingness and our commitment. Venezuela has always been a good borrower.
Lo que se llama en el argot cotidiano y coloquial, somos un buen pagador.
Hans Humes owns Venezuelan bonds and makes frequent trips to Caracas. If the trading ban gets dropped and the government is allowed to negotiate with its lenders, he says it could be a bonanza.
Something in the sort of 50-60 range on a net present value basis, I don't think is out of the question.
Latin America has a long history of authoritarian regimes. Venezuela's surely won't be the last. Yet Maduro is clearly longing for a future that looks more like the past he once knew.
I've driven with my wife. I've driven in New York. I myself have driven New York, Boston, Baltimore, Philadelphia, the whole East. I've driven in Miami. I've had a little drink and I have danced salsa on Calle Ocho of Miami. I know the United States, Atlanta. I've gone to the place where the remains of Martin Luther King are, and all those neighborhoods. I've gone through them.
While Trump was president, many thought military intervention was the best way to change the regime in Venezuela. That's no longer on the table.
I will not support a coup d'etat. A coup d'etat is what led Venezuela to this catastrophe. In 1992, Chavez tried to seize power by force, speaking of resentment and hate to a certain sector of society, and we're seeing the consequences now. All that was accomplished was disaster, catastrophe.
Francisco Rodriguez was chief economist to Venezuela's Congress during the Chavez years. He doesn't think there's any chance Maduro will step down before the 2024 presidential election, not unless the U.S. gives him the one thing he craves: recognition as president, legitimacy in exchange for an orderly exit.
Maduro would be essentially committing to not running again, to stepping down in 2024 at the end of his term, and you could do something that changes the Venezuelan situation, that opens up the space for a transition, for a new figure to emerge, which might come from Chavismo, might come from the opposition, but which will essentially allow the country to take a step forward.
Will he or won't he run in 2024? It could be the most consequential question for Venezuela's future. Maduro won't say.
My destiny, my future, honestly, it's not the most important thing. The most important thing is the country, and that's where our efforts are focused.
Neptune was discovered, everyone wanted to do it because it was this clear demonstration that you can use math to discover objects.
Unfortunately, since then, no major planet in our solar system has been found. But thanks to modern telescopes, thousands of smaller objects have been discovered in the past few decades beyond Neptune, called trans-Neptunian objects, or TNOs. And planetary scientists at the California Institute of Technology have noticed some anomalies with these objects. Their hypothesis? A giant theoretical planet beyond Neptune, Planet 9. And thanks to a new telescope, equipped with the largest digital camera ever built, we may be one sky survey away from finally finding it.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
born in Russia, emigrated to Canada with his parents at the age of 6, and had already mastered multiple languages, mathematics, and engineering by the time he got to high school. At age 17, his father introduced him to Bitcoin. He couldn't afford to buy it, so he wrote about it instead. And while he found Bitcoin fascinating, he felt like he had an even better idea. In 2013, Vitalik Buterin wrote the original white paper that conceived Ethereum, not just a digital currency, but an entire network built on the blockchain. It's now worth more than $300 billion, and the biggest believers claim it will send the rest of the cryptocurrency market into the ether. Joining me on this edition of Bloomberg Studio 1.0, the inventor of Ethereum, Vitalik Buterin.
We're going to talk about Ethereum, but I want to start first with how you got here. You were born in Russia, you emigrated to Canada with your parents when you were just 6 years old, and you started learning about Bitcoin from your father. What is it about Bitcoin that hooked you both?
Bitcoin is really interesting because of how interdisciplinary it is. I was very interested in math and computer programming and cryptography and technology. I was also very interested in economics and kind of politics and philosophy. And Bitcoin just happens to be this interesting fusion of all of these things, right? And at the same time, it's not just a piece of code that's there for fun. It's not even just an app. It's something that's really intended to have a very big and meaningful impact on how the world works. And so I think just having both of those aspects together definitely made Bitcoin very interesting to both me and my dad.
As I understand it, you didn't have enough money to mine, so you wrote about it instead. And in 2013, you wrote the original white paper that became the basis for Ethereum. What was it that sparked that original vision?
So I joined the Bitcoin space in early 2011, and I wrote that Ethereum white paper at the end of 2013. That was the time when things first blew up, and it was clear that this was something that's significant, right? Well, I remember going to the Bitcoin conference in San Jose, which had about 1,000 people in it, and that was when I realized that, hey, this isn't just a bunch of weirdos who only exist on the internet. This is real. There's people trying to actually do things. There's people building businesses, a lot of which are actually pretty successful. What started happening then was people started thinking, well, we have Bitcoin, what next, right? So what else can you do with blockchains? What would Bitcoin 2.0 or cryptocurrency 2.0 look like?
As I understand it, it wants to be a whole new operating system, like a new Apple iOS, with a ton of apps built on top of the blockchain. In the simplest terms, what is Ethereum and how is it different from Bitcoin?
So Bitcoin is a blockchain that's designed for one application, right, which is maintaining and letting people use Bitcoin, the currency. Ethereum is a general purpose blockchain. So instead of being a blockchain that's designed for one application, Ethereum is a blockchain that supports a built-in programming language, and whatever blockchain application you want to build, you can just write the logic of that application in the programming language, upload that program to the chain, and this becomes what we call a smart contract. And anyone can then interact with your application, and the blockchain interprets the rules of your application for you. So instead of being something that's designed to do one thing, it's designed to open up space for creativity to basically let people do whatever thing that they want to do on top of it.
So is the idea then that the next Facebook or Twitter would not be owned by Jack Dorsey or Mark Zuckerberg, but be built on the blockchain and owned by everyone?
There are multiple projects already trying to do that, and lots of them are based on Ethereum, so yes.
So then is Ethereum a threat to established, centralized companies and social networks like Facebook, like Twitter, like Google?
I think it can be a threat, but it can also be an opportunity. Like, I think even Jack Dorsey himself, right, he has this project called Blue Sky, which is trying to figure out how Twitter can kind of incorporate decentralized elements. And, I think a lot of these projects want to actually do this, right, because I think a lot of them are realizing that being a kind of centralized focus of power and having control and of so much of everyone's data and all of these things, like it's not just an asset, it can also be a liability as well.
Now, we still don't know who Satoshi Nakamoto is, whether that's even a single person or a group of people. What is it like to be a known and visible figure behind such a popular technology?
I mean, there's definitely times when I want to be less visible, but I guess that comes with the territory.
Why do you want to be less visible? I mean, one of the other Ethereum co-founders, Anthony DeLorio, recently announced he's quitting crypto because of safety concerns. I mean, is that part of your concern as well?
I mean, it's not so much physical safety per se as just like wanting the ability to also, have a life and not just have like random people running up and saying, "Are you the Vitalik Buterin?" I don't know. There's definitely times when I find such things annoying, and so I don't know. I'm likely to keep wearing my mask in lots of places, and that has nothing to do with COVID.
There was a lot of debate early on about what Ethereum could be, would be, should be. For-profit, non-profit. Non-profit won out, and I know that that was really important to you. Why did you want Ethereum to be a non-profit, and how did you come to that decision?
It was just very important to me that this is a technology that decentralized infrastructure that's meant to be not controlled and not owned by anyone. And it's a platform that's for the world. And so for that platform to be connected to a company that had a very small number of shareholders, I think is something that could really centralize the ecosystem, and so something that I thought would be very unhealthy and wanted to really avoid.
Now, NFTs in particular have really helped bring new users into the crypto tent. We saw you at Ashton Kutcher and Mila Kunis's kitchen table.
What's Ethereum?
You also were not happy about Kim Kardashian getting involved, and I'm curious, where do you draw the line when it comes to celebrity endorsement?
The thing that I was unhappy with about Kim Kardashian was that she basically like shilled something like Ethereum Max that was I'd call it a borderline scam, right? It seems like this project that's basically just like at best a pure money grab that's not really providing much of value.
Ethereum has had some growing pains. Why do these problems exist?
This entire ecosystem has blown up and gotten big fairly quickly.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
What's happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
Ethereum has had some growing pains, whether it is high transaction costs, traffic jams, front running. Why do these problems exist?
This is the scalability problem. Everyone's been talking about the scalability problem for at least 5 years now. Basically, it's like a simple supply and demand problem, right? Like if the number of people who want to send transactions goes up, but the amount of space for transactions on chain doesn't go up, then all of these people who want to send transactions are bidding against each other, and only the ones that are willing to pay a really high amount can actually get in. The only way to solve this is to just improve the technology to increase the number of transactions that the system can process. It's why we've been doing just all kinds of incremental improvements to the blockchain clients and the protocol and the code over the last 5 years. Ethereum scalability has increased by about a factor of 5 since the project started. And then there are some problems that are not like just scaling problems per se, but they're still technology problems, right? Like there are problems that have to do with the fact that like this entire ecosystem has blown up and gotten big fairly quickly. There's a lot of aspects of it where people are still trying to understand like what is the correct way and what is the safest way to do these things. Right? Like for example, the state of just security auditing for blockchain protocols. Like it has gotten much better since the DAO hack back in 2016, right? But at the same time, challenges continue to exist, and that's normal in any space when you have, I guess, usage growing faster and then the technology catches up.
Can you contrast proof of stake with proof of work? Why do you think that's so much better?
The reason why blockchains need to have proof of something, right, is because like these are decentralized systems. So for example, in proof of work, like the system actually measures how much computing power is being put into each block. And so in order for an attacker to take over the network, they actually have to have more computing power than the rest of the network combined, right? Like, so you can't just spin up a billion virtual machines on one computer, but the problem is that it requires a huge number of computers to be constantly running 24/7. So it works, but it's very expensive. Proof of stake, it works differently, right? So proof of stake works by instead using coins as the economic resource. So if you have coins inside of the system, then you just sign messages with those coins. And for an attacker to take over, they have to basically have like more coins than the rest of the network put together. So it does the same thing, but it avoids the need to have these computers running 24/7, and that's where the efficiency comes from.
You're planning major upgrades, meantime, and ETH 2.0 is well underway. What will that accomplish? What problems will it solve?
So I think what people call ETH 2.0 has two big parts, right? One big part is the switch to proof of stake. So after a full transition to proof of stake, there will not be any more mining. Ethereum's energy consumption will go down by like a factor of more than 1,000. So it'll go from being a big problem to basically not a problem at all. And the chain will become more secure, it'll become more efficient. So after that, the next major milestone is what's called the merge, which is when basically the proof of work chain just stops running and all of the applications on the proof of work chain get moved over to the proof of stake chain and continue running inside of the proof of stake chain from there.
Now, while you're working on all of this, Ethereum has developed an unseemly reputation as a fertile ground for scams. And I wonder how concerned you are about a crackdown like we saw with ICOs. What are the longer-term consequences?
There's definitely going to be crackdowns on things happening on blockchains, just like there's crackdowns on things happening on the internet. I do think that the state of the industry and the state of things is improving. But if you just compare it to the way that the space was like 5 or 8 years ago, right? Like 2014, remember, Mt. Gox just like collapsed and $500 million disappeared. Like, and I think we still don't know where most of it is. And like things do continue to happen from time to time, but just like as a fraction of the scale of the space, I do think that it keeps getting smaller and smaller. One big consequence, of course, is that mining is moving out of China, which, I mean, there's definitely a silver lining there in terms of decentralization, in that you don't have as much hash power located in one country anymore. But at the same time, you know, the mining farms there were, you know, real companies with real employees and real people. Some degree of regulatory action is happening, but it's not looking like, you know, anything close to, you know, the level of, like, say, what people feared 10 years ago.
There's concerns about Russia being behind a spate of cyber attacks and cryptocurrency being used as a tool of extortion. How do you think about the intersection of crypto and cyber warfare?
To me, I think that this is a temporary phase. Like, I think what's happened is that just like even like the internet as a whole, it grew a huge amount over the last 20 years. And for most of that 20 years, people just did not take security seriously. It's even the wrong thing to be doing, to be trying to blame attackers. Ultimately, the things that's at fault is the fact that there are these excellent tools within cryptography and like within, you know, the technology behind cryptocurrency itself that allow you to be much more secure against these kinds of things. And I mean, my personal hope is that people like at least see like the level of attacks that are happening now as a wake-up call, and that we get a massive effort to just improve the level of security just across every industry and across the world. Because if that doesn't happen, right, like then, you know, it's not even ransomware attackers or that are going to be a problem. Like, it's at some point, you know, whenever the first like full-scale cyber war happens, if people are not prepared, it's something that could end up, you know, being something really bad for the world.
Whether Bitcoin, Ethereum, or the blockchain really are changing the world seems to be an ongoing debate. Is crypto the future, or is it a fad?
I think it's the future that contains fads.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Right now, it is mostly finance apps that are built on Ethereum, aside from NFTs. And I'm wondering, what is the killer app for Ethereum that could lead to widespread adoption, much like email was for the internet?
I think there's a few candidates. So, I mean, DeFi is obviously one of them. I think the blockchain-based financial things have always been attractive because the traditional financial system just sucks more than traditional centralized tech, right? Like, if I send an email to someone in Guatemala, then they're going to receive it in 1 second. With finance, you can't even say that. A lot of people and companies, even today, just to use cryptocurrency to send money internationally. Outside of finance, I think one interesting area where I think blockchains might go. You notice that in order to access your assets in Ethereum, you need to have an account. We're getting to the point where there's a lot of work that's been done on making these accounts very secure. And so instead of just being accounts that hold money, like these turn into like fully blown profiles, right? And once you have profiles, then you can start doing decentralized social media on top of that. The social and financial things that you can do with that, even working together, is something that I think could be really big.
Now, whether Bitcoin, Ethereum, or the blockchain really are changing the world seems to be an ongoing debate. Is crypto the future, or is it a fad?
I think it's the future that contains fads, much like the internet was the future and the internet contained fads. There's definitely specific kinds of applications that do get overhyped from time to time, like ICOs back in 2017, and then there's certain kinds of DeFi right now, but at the same time, there's other DeFi projects that really are valuable. There's a combination of both, right? And figuring out which is maybe it's something that's difficult to see ahead of time, and it's something that we as an ecosystem are going to find out.
So the crypto skeptics, many people that are admired in the financial world, Jamie Dimon, Warren Buffett, are they just wrong?
A lot of them have definitely been just wrong already, right? They expected even back in 2013 to 15, at least some of them, to see blockchains and cryptocurrency fail and go down to zero in price, just not get any more interest completely. And even today, they've already been far more successful than any of them expected. So I can see how people in traditional finance, or at least some of them, can be inclined to kind of not see the value of blockchain-based finance immediately. There's a lot of people, even in traditional banks, that see the value that blockchains provide and have been trying to come up with things and work with them.
One of them is Jack Dorsey. Jack Dorsey recently announced Square is creating a new business focused on decentralized financial services based on Bitcoin, using Bitcoin. What have you learned about Jack Dorsey's plans? Does it seem like he's building something that sounds a lot like Ethereum?
I'm skeptical about these decentralized finance on top of Bitcoin type of projects. Basically because the difference between Bitcoin and Ethereum, right? This is that on Ethereum, there's native functionality that allows you to essentially directly put either ETH or Ethereum-based assets into these smart contracts, into these lockboxes, where there's then arbitrary conditions of any kind that can then govern how those assets get released. Bitcoin does not have that functionality to the same extent. Jack is basically going to have to essentially create his own system that enforces those rules, and then on the Bitcoin layer, the Bitcoins will just have to be owned by probably a multi-sig wallet controlled by either Jack or the participants in the system. It looks similar, but it'll end up being something with a much weaker trust model, right? I really think that this is the whole reason why Ethereum started as an independent system in the first place, right? There's technical limits to your ability to kind of graft new functionality onto a system that's not powerful enough to support that new functionality.
Facebook's Mark Zuckerberg is also making some big moves behind the metaverse. And what do you make of them wading into this decentralized world? Could they replicate some of the same problems that we see in Facebook and Twitter today?
I think Mark is clearly trying to figure out what the next stage after the internet is, and actually get into it and create it. but before the rest of the world goes in some different direction, and Facebook is sort of left in the dust and becomes one of these kind of previous generation old world companies. So we've seen Facebook try to get into the crypto space with Libra, though. I think in the end, Libra did end up being possibly the wrong approach, because the problem that someone like Facebook has, right, is that a lot of people mistrust them, and so building their own platform, I know they tried really hard to create something that's a consortium with all these different industry participants, but at the same, even that was not enough, right? And there's just a huge amount of mistrust of them. But with the metaverse, I guess the thing that happened during the pandemic is that we've basically very quickly switched from a world where the physical world was people's kind of primary center of experience, and the internet was this new add-on, to a world where the internet really is the center of people's experiences. And so we basically are spending most of our time in a virtual world, and the question is just, what level of quality does that virtual world have?
So Ethereum in 5 years and 10 years, where is it?
Hopefully running the metaverse, but I guess we'll see how it goes.
You've got a lot of people out there, a lot of people who are trying to understand cryptocurrency, who are placing their bets. What's your prediction for Bitcoin? Does it replace the dollar? Does it exist in 50 years, or is it something else? And then similarly, what's your prediction for Ethereum? Because a lot of investors are choosing to hold both, or one or the other.
I think replacing the dollar completely is unlikely, just because there's things that the dollar provides, like price stability, for example, that Bitcoin is not going to provide. I think even in a theoretical world where the US dollar collapses, even then, I think Bitcoin is not going to be able to provide the level of stability that users and businesses expect to be able to set prices in. And in that kind of world, we would need something else. It could be decentralized stable coins, it could be something else, but we'll see. But at the same time, I think cryptocurrency can still have a very powerful and important role alongside existing currencies.
Ethereum seems to have this reputation of being a community of creative engineering types who like rainbows and cats and mythical creatures. I know you have some fun t-shirts yourself. Is that a fair depiction of the community?
The community is a diverse place, and it has many different kinds of people, and it definitely has its fair share of cat people and dog people and unicorn people as well, and I think that's awesome. And I think it's really healthy to not take yourself too seriously, and that's definitely something that the Ethereum community strives to do. Remember that the world is supposed to be a place to have fun too.
All right, Vitalik Buterin, inventor of Ethereum, thank you so much for joining us.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
What do you predict the Taliban will do in the coming months and years?
I would say consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban, not supporting transnational jihad, not basically in any activities outside of Afghanistan. If you really watch carefully what the Taliban have done in the past few days, they are engaged in a public relations offensive. They are trying to convince the world. If you listen carefully to what they're saying, you think that the Taliban are newly born Democrats. They are peacemakers. And the reason why they want to consolidate their power, they want to convince the world that the Taliban have changed.
Long after Bitcoin was born, Fred Ursum became an analyst at Goldman Sachs. The new, mysterious digital currency had been invented by Satoshi Nakamoto, a pseudonym for a person or group that wanted to circumvent the traditional banking system. On a good day, the price was mere cents, and almost no one knew what it was. But Ursum saw the potential. He bought in as much as he could and found himself obsessively checking early cryptocurrency exchange Mt. Gox and scouring Reddit threads where he met another Bitcoin enthusiast, Brian Armstrong. As Mt. Gox was hacked and going bankrupt, Armstrong and Ursum were building Coinbase, which would become the most mainstream place to buy, sell, and store cryptocurrency in the United States. In the span of a little more than a decade, the crypto market went from zero to more than $2 trillion, with some euphoric highs and gut-wrenching lows in between. Joining me on this edition of Bloomberg Studio 1.0 to talk about that wild ride and where it's going next, co-founder of Coinbase and the crypto investment firm Paradigm, Fred Ursum.
Take me to the very beginning of your crypto journey when you were an analyst at Goldman Sachs. What was it that drove you to this emerging technology?
Geez, I think I was lucky because I had three core ingredients to understand crypto. One was I was a computer scientist and engineer by training. The second is at Goldman, I was trading FX, specifically the euro, and watching the European debt crisis unfold every day, watching the IMF give the next tranche of bailouts to Greece, seeing how the euro would trade on that, thinking, hey, maybe this isn't working so well. And the last is I was a hardcore gamer in high school. I was on the best team in the world at a video game, lived in these virtual worlds that had virtual currency all the time, so that idea was pretty natural to me. And this was right around the time that Bitcoin came out on the internet, around 2010, 2011. And nights and weekends that I would just spend my time getting further and further into it.
Tell us about the moment when you realized that this crypto thing was really something, when the world and your friends probably had no idea what was going on or thought you were crazy.
Well, when we launched Coinbase in 2012 out of a 2-bedroom apartment in San Francisco, it did seem like a crazy idea at the time. You walk down the street, nobody would know what Bitcoin was. Those people who knew about it probably thought it was nuts. The literal advertisement, even on the Bitcoin subreddit at the time, was a bad Microsoft Paint painting of a wizard that said magical internet money. So very, very non-obvious at the time. The thing, though, that really stood out is the community was extremely strong, even though it was small. And if you look at the early Coinbase numbers, things grew really well, especially when we added the simple feature just to buy and sell Bitcoin with any US bank account with one click. So while it seemed crazy to most outsiders at the time, it was clearly growing on the inside. And I think that's even true in crypto today. On some level, you have these kind of radical believers on the inside and then many people on the outside who might still be touching the elephant, still trying to figure out exactly what's going on here.
How did you meet Brian Armstrong, co-founder of Coinbase, and what did you two set out to do?
Well, like any great crypto venture. It started decentralized in some sense. We met on Reddit, on the Bitcoin subreddit. He posted a prototype of an early version of Coinbase, and I emailed him. We met up at the now infamous Creamery in San Francisco, which is sort of the, like, back in 2012 was the place where everybody would do meetings. Started working together 15 hours a day for 4 weeks, weekends included. It turned out we both really cared about building something in crypto that allowed the whole thing to go mainstream.
And at the time where you bought in, like, had you invested your own money into this magical internet money, not knowing what would happen?
Yeah, I was fully bought in both financially and career-wise. I quit my job at Goldman and moved out to the West Coast, not even having a place to live. Obviously started working on Coinbase, and then financially, I didn't have very much money, but the little money I did have, I invested in Bitcoin. And it's funny, the most expensive thing I own today is still a car I bought in 2012. I bought it for $19,000. At the time, Bitcoin was about $10. So in opportunity cost terms, that's about a $50 million car. I still love the car, but just to give a sense for how expensive real world goods are in Bitcoin terms over time.
You were at Coinbase, co-founder, until 2017. You were president, I believe, at the time, and then you left. Why did you leave?
A couple of reasons. One, I felt like the company was just in a very good spot. The second is, for much of crypto's history, so from 2010, when Bitcoin sort of came out, 2009, up until 2017, really the only idea that seemed possible in crypto was this idea that it was a new global digital money. And the thing that really changed in 2017 is all of a sudden the doors opened to much broader applications. Ethereum came on the scene and showed that blockchain-based applications were possible to build, and people were building very early versions of them. Today, we know those things better as DeFi or these decentralized financial applications that live on the blockchain. And even more broadly, I think over time, we'll see mainstream consumer apps, and perhaps NFTs are a weird bleeding edge of exactly that. So I found that whole new frontier to be extremely exciting.
Coinbase's direct listing, it's now a public company, was a huge moment for mainstream institutional adoption, but it still seems like so much of the world doesn't get crypto and how big it can be. What do you think they're missing?
The short answer is a lot. I think, look, crypto is its own rabbit hole. And just like any new powerful technology, it's extremely powerful because it reimagines very important systems that run the world today from the ground up. Most people primarily think about crypto, again, as a new digital money. That's really worked, especially with Bitcoin as a store of value, where we've seen Bitcoin go from 0 to $1 trillion in market capitalization over the last 10 years. But crypto goes much deeper than that. We think about crypto at Paradigm, which is the investment firm I've started along with Matt Huang, in 3 stages today. And of course, this model will evolve over time. The first is a new digital money. The second is a new financial system. And the third is just a broad internet application platform. So in our minds, crypto isn't just kind of this new digital money or new digital gold. It's a whole new financial system that we're seeing being built from the ground up by talented entrepreneurs all around the world. And while it's extremely early on the third frontier, a new application platform, we think that over the course of decades, a lot of internet applications that we're all using will also be crypto-based.
I've talked to investors who say Coinbase could be the next AOL. It's the first exchange that's really gone mainstream, but it's too early, and others will, or something else will surpass it. What do you think?
I think it's a fair question. I think history is yet to be written. My view is that it's a very strong place to be, to have the largest mainstream brand, trust, not only with users, but also with regulators. And that being that bridge into the crypto world is a great place to start.
Now, as you mentioned, you now run a crypto-focused investment firm called Paradigm. How is the crypto style of venture capital different from traditional venture capital?
Yeah. Well, I think in a few ways, just to talk about why we started Paradigm in the first place, myself and Matt Wong, who was previously a partner at Sequoia, focused and running their crypto investing efforts. We realized a couple of things. One, crypto is a whole new field that needs 100% focus. The core question that Matt and I asked ourselves in starting the firm is there anybody out there who, if we were crypto entrepreneurs building a business, and Matt was a former Y Combinator startup founder, I obviously started a large crypto company in Coinbase, who would we want to have as our first backers? And we couldn't really come up with a good answer to that question. The last is, I think the expertise required both on the team and operationally in crypto is very different. So we're really trying to build a firm from an engineering and entrepreneurial point of view to best support these crypto native companies and protocols.
The crypto VC landscape is getting now more competitive. So where are you placing your bets? How do you stay ahead of the curve?
The thing we're really excited about is a number of fronts. One is the picks and shovels businesses. So now that crypto has grown a lot, there are all sorts of basic infrastructure businesses that are being built out to support that ecosystem. Those, of course, include exchanges, also custodians, tax providers, KYC AML providers, lenders, crypto backend as a service for any business that would like to integrate crypto, all sorts of these picks and shovels businesses. A second big frontier, as we talked about before, is DeFi. All of these crypto native financial building blocks that are being built out and today support around $75 billion in user assets, up from effectively zero 3 years ago. And this is sort of the bleeding edge of what we see as a whole series of crypto native applications.
The U.S. government has yet to really take a stand on crypto, but President Biden's SEC has made it clear that some sort of stand is coming. What kind of regulation do you expect?
I do think that crypto is a nuanced issue and that it's possible the U.S. gets crypto wrong.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this like accompanying surge in deaths as well.
There were something like 4,000 cryptocurrencies at the start of the year. I mean, is that too many? Do you expect more?
It's just like the internet. People are going to try all sorts of things. There'll be millions and millions of cryptocurrencies and crypto assets, just like there were millions and millions of websites. Most of them won't work, especially early in the technology.
There's a lot of dedicated communities out there and a lot of tribalism. Is that a good thing?
It's an interesting question. I think every new powerful technology tends to feel very polarizing at the beginning. So I think some level of tribalism is inevitable. At Paradigm, we think that we're super early in this technology. So getting too caught up in any singular view or belief or paradigm, no pun intended, is probably unwise.
What do you think about Doge? Is it a hustle, or do you give it more credit than that?
I think, well, perhaps framing it from Elon's point of view, and it's always dangerous to guess what's going on in the mind of Elon, of course. If crypto has taught us anything, it's never to dismiss a good meme that could later manifest into more concrete progress. I tend to think there's less of that on the ground today. More holistically, I think whether it's Doge or more the NFT phenomenon, I do like that there are a lot of things recently that I think have just brought crypto to a much more mainstream awareness and audience. One joke we often tell is NFTs made it really obvious that most crypto insiders sort of were nerds that tended to care a lot about monetary theory or the intricacies of the financial system. And what NFTs really showed us is that a lot more people, it turns out, care about culture, music, art. Basically everybody does. And that's been a huge boon just for public awareness of what the technology can do.
Okay, but hasn't the NFT market kind of imploded over the last few weeks? I mean, sales in almost every category are drying up. Like, what's happening there?
Yeah, volume's definitely down. And again, I think that's natural, just like the cycles in crypto are. I go so far as to say that 90% of NFTs produced today probably will have little to no value in 3 to 5 years. You could say the same thing about early internet companies in the late 90s too, though. It's sort of inevitable in a new technology that people are going to try a bunch of stuff. Most of it won't work at the beginning, but the technology itself is really important and really valuable over the long run. And there will be a few things that end up being fundamental building blocks that really do matter.
I want to talk about regulation because the U.S. government has yet to really take a stand on crypto, but President Biden's SEC has made it clear that some sort of stand is coming. What kind of regulation do you expect?
So I think the U.S. is at a very important crossroads with crypto today. The U.S. is blessed with the best currency and the world's reserve currency today. It also tends to be the de facto financial regulator for a whole bunch of the world. We also have a history of being the strongest technology country in the world. If you look at the most valuable companies in the world today, most of them are American internet technology companies, the Googles, the Microsofts, the Facebooks. I do think that crypto is a nuanced issue and that it's possible the US gets crypto wrong. I think today you have a lot of regulators whose job it is to mitigate risk and keep us all safe, and that's very appropriate. At the same time, I think crypto is the next internet-sized opportunity for the United States. I think it has the potential to create as many, if not more, jobs in the internet, similar with economic growth. I think it has the potential to square the circle on the privacy internet issues that we've been talking about with big tech companies for the last 10 years. Namely, we could use these technologies to continue to own our own data while still getting all the benefits of the internet platforms we know and love today.
China is taking a stand on crypto, for better or for worse, and that's also where most of the mining is happening. Do you have concerns that China is going to beat the U.S. in crypto, and that's kind of a big deal?
Candidly, yes. Yeah, and it's on multiple fronts, to your point. One is there are government programs to explicitly build using crypto. This is true both with their DCEP initiative, which is basically making a digital renminbi. It's also true of local governments who are trying to use blockchain technology. And then to your point, historically, most crypto mining has been in China. Recently, there was actually a government crackdown in China on mining, oftentimes because energy was being siphoned from the Chinese grid in ways that may or may not have been kosher. So I think there's actually a huge moment of opportunity today for miners in the United States or globally to step in and on the crypto side to make it more decentralized. And then if you want to view it from a nation state point of view, to make sure that no single country is in control.
The big promise of crypto is that it is the next iteration of the internet. How long until we get there, to that future?
We're headed into a world where both users and creators don't need centralized platforms or institutions anymore.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
There are folks out there who think crypto is a gimmick or a Ponzi scheme or an unsafe hedge against inflation. What do you think are the biggest myths about crypto that you want to bust?
Oh, geez, so many good ones. Well, perhaps number one, that crypto is all about speculation. I think all investment can be framed on some spectrum from speculation to extremely that there is real utility for crypto being built today, all these financial services and new internet applications. A second big one, of course, is energy. This is one of the hot topics, no pun intended, around crypto today. My meta view of the issue is that it takes far more energy and resources to protect and use physical assets than it does digital ones.
So does that mean you think the energy concerns raised by Bill Gates and even Elon Musk are a red herring?
I think they should examine the issue more closely. And I think the industry hasn't done the best job of making legible exactly what's going on here. So my personal view is it's actually going to be a lot more energy efficient to use these digital systems of value transfer over time. But it's understandable that there's a lot of confusion early, especially given the nature of crypto, which is that it's decentralized, so nobody has all the information in some sense.
As you said, crypto is the next internet-sized opportunity for the United States. And The big promise of crypto is that it is the next iteration of the internet that could free users from the power and control of the gatekeepers, whether it's the big banks, whether it's Google or Facebook. How long until we get there to that future that you see?
Well, I think in very small ways, we're already there today in the sense that you can own your own global permissionless money. And you can be your own bank in crypto by simply downloading free desktop software that anybody in the world can run. I think it will take decades and decades for all of the applications to be built out around that base. So a full-blown financial system, I think we're probably 0.1% into what that looks like in a crypto native form. Mainstream applications, I think we're effectively at zero. And that's what we're so excited about at Paradigm, is watching that whole space get built out and unfurl.
So what does that mean for the Googles and the Facebooks? Do they disappear someday?
I think this is kind of like e-commerce, where the world doesn't change overnight, but you can see the seeds of exponential growth occurring already. So I do think we will live in a future where, for us to coordinate, we won't need these centralized platforms. Today, that's already true of financial services, in that in crypto, you can be your own bank. You don't need a central institution to hold your money anymore. I think that's true in the web application sense, where already today, there are creators who are pushing their work out over crypto rails from their own crypto wallet, where the social graph exists directly on chain. You don't need Facebook or Twitter or Instagram to have a follower graph. It just all happens right on the blockchain. I think that's where we're headed. We're headed into a world where both users and creators don't need centralized platforms or institutions anymore.
Take me out 10, 20, or 50 years. How has crypto changed the world? What's different?
I think one thing people don't yet fully grasp about crypto is how, in a world that is increasingly going digital, your crypto wallet is the entire representation of the digital you. So that means it's your bank account, it's your online identity, it's your universal login to every internet application, it's your digital resume, sort of your digital LinkedIn, and all these things are in one place. You can use your real identity, you can use a pseudonym somewhere in between, and